Hi, I'm Kinjal Parekh and welcome back to this brand new video. As an investor, before we invest in a company, we check various financial statements of the company. We compare and analyze the financial ratios of the company with its peer and other competitors in the industry. But is this enough? Does this provide us with a complete picture of the company? How do you decide if the company has a good sustainable competitive advantage? How do you analyze if the sector or the industry as a whole has the potential to grow and withstand competition? Well, that is exactly what we are going to learn today. Porter's five forces are used to analyze a company and an industry as a whole. The five forces are competition in the industry, the threat of new entrants, the power of suppliers, the power of customers, and the threat of substitute products. This model is named after Michael Porter, a Harvard professor. It was first mentioned in his book Competitive Strategy in 1980, and even after 40 years of it being published, it still stays relevant. These five forces are frequently used to analyze a competition's strength, attractiveness, and profitability. In this video ahead, we are going to understand these five forces in detail and how you can use it while doing your own analysis. The first Porter's force is the competition in the industry. Competition keeps companies on their toes. It motivates them to do better. Just like when we were in school and we used to always be motivated to score better than our classmates. So always remember, before you invest in a company, always understand the company's position amongst its competitors in the industry. Remember, the larger the number of the competitors in the industry, less is the company's pricing power, and less the number of competitors in the industry, higher is the company's pricing power. For example, in the Indian aviation sector, the switching cost for customers is very low. If you find a better deal to travel from Mumbai to Goa, then you won't think much before switching to another airline. Hence, the customer loyalty factor in a competitive intensive industry is very low, and thus there is a cutthroat competition amongst various airlines in the Indian aviation sector. To make your research more thorough, ask these following questions. How many competitors does the company have? What is the market capitalization of the industry? At what rate is it growing? Compare the growth rate of the company with its various competitors. Compare its global presence. What is the switching cost for customers and what are the barriers to exit? This will give us an overview of the entire industry. Most of these information you will be able to find out from the company's annual report. Using this information, using this data, you will be able to map out the structure and the attractiveness of the companies and the industry as a whole. Now let's move on to our next force, that is the threat of new entrants. The threat of new entrants refers to the difficulties that a company faces when a new player enters the market. The new entrants face various barriers while setting up their business. This includes setting up their entire distribution channel, the capital requirement, the legal requirements, patents, etc. Remember, an industry with high entry barrier will have low competition, and an industry with low entry barrier will have high competition. For example, if a company is about to launch a new product and the entry to barrier is very low, there will be many competitors who will enter the market and try to replicate the exact same product. This will lead to increase in competition and further rise in expenses. The stock price will also not see any huge impact despite the launch of new product. In the airline industry, the threat of new entrants can be considered from low to medium. The new entrants will be in a need of license and a huge upfront investment. Plus, the existing airlines in India today have already a very strong base and a huge set of assets. Thus, the new entrants will not have a competitive advantage right from the start. To make your research more thorough, ask these three following questions. Are there any legal barriers to entry? How much capital is required to enter the industry, and how do existing companies respond to the new entrants? The less time and money it costs for a rival to enter the market, the greater is the threat of new entrants. We now come down to the third Porter's force, that is the power of suppliers. It addresses on how suppliers can affect and influence the profitability of a company. If the number of suppliers in an industry are low, the more dependent a company becomes on them. For example, in the airline industry, they are majorly dependent on fuel and aircrafts. The prices of fuels are subject to fluctuations in the global market. The airline industry has little to no control over these prices, and hence they are very much dependent on them and have no control at all. As a result, the suppliers can increase the prices, which will affect the entire industry as a whole. To make your research more thorough, ask these three questions. How many suppliers are there in the market? What is the cost and the financial strength of each suppliers? And what is the switching cost for a company to switch to another alternative material? This will give us an idea on how much a company is dependent on external forces. This also brings us to our next point, which is closely related, that is power of customers, which many of us might find very relatable. You cannot operate a company without having customers. They literally are the king to any businesses. They have the power to force the sellers for better price deals and services. The force largely depends on how many customers does a company have and how significant each customer is. To make your research thorough, ask these following questions. How many potential buyers are there in a particular industry? What is the size and volume of each sale? What is the cost associated with a buyer switching to another supplier? How many substitutes exist in that particular industry? Are the buyers sensitive to price changes? For example, the bargaining power of customers in the airline industry is considered to be very high. There are various tools that they can use to compare various offers and pricings of the airlines. Plus, they hardly incur any switching costs. Hence, they will always prefer the least expensive offer. This brings us to our last Porter's force, that is the threat of substitutes. Availability of substitute goods is a major threat. Let's understand this with the help of an example. You can switch from buying Tata Tea to Red Label or any other tea brands if you find a better offer. There are so many substitutes available to them. So if even one brand increases the prices, the customer will automatically shift to another brand to find a better deal. So remember, products with high substitutes available will have low pricing power, whereas products with low substitutes or no substitutes available will have high pricing power. For example, a customer may decide to travel by road instead of booking a flight. Various factors like price, time, safety, etc. comes into consideration while making this decision. Air travel in India is comparatively expensive, which makes railways a feasible substitute. It connects various cities and remote areas, which makes traveling feasible and accessible. Plus, given the pandemic situation, the flight service has dramatically declined. So, we can say that the threat of substitute in the airline industry is medium to high. So, before investing in a company, check what products and services is the company offering, what substitutes are available in the market, and how are they performing. And lastly, check if the company has the ability and the potential to withstand this substitution threat that is threatening their profit lines. These were Porter's 5 forces. This is a qualitative parameter that is often ignored by many investors. Let your first step be to gather relevant information. Using the data, you will be able to compare the company's position in the industry. Use this table for quick reference to understand the attractiveness in the industry. In our next video, I will give you a 5-step framework which you can use to analyze the entire company on your own. Make sure that you have subscribed to our channel and also click on the bell notification icon so that you do not miss out on any of our future videos. I hope that this video was helpful for you. If you have any doubts or queries, then please comment them below and we will get back to you. Thank you so much for watching this video.